At the end of first year, you are paying 100 rupees. At the end of second year, you are paying 100 rupees. At the end of third year, you are paying 100 rupees. At the end of fourth year, you are paying 100 rupees. But at the end of fifth year, you are paying 1,100 rupees. 100 as a principal, 100 as an interest, and 1,000 as a principal. So you need to equate this inflow and outflow. That is why I wrote equate. You see the screen, what is mentioned? Equate them at an appropriate discounting rate. How do you equate? Look at the subsequent slide. But before I move on, tell me if you are not clear about anything that I have said to you just now. Do you wish to seek any clarification of whatever I have said so far? Enter your names, enter your roll numbers in the chat box if you have already not. You need to seek some clarification, or should I proceed? If there is any one of you, kindly ask me the clarification. If not, I'll move on to the next slide. This is what I have written. I have illustrated with a different example. Suppose a debenture of rupees 100 carrying 10% interest is issued at par, will be redeemed after 3 years at 20% discount. There is no difference between this problem and the one I said before, except the timing and the rate. That's all. Figures will change, but methodology will remain unchanged. Read it carefully. In case of inflows are 100, what issuing firms receives, and outflows that firm gives would be 10 in the first year, 10 again in the interest the second year, 10 again in the third year, and for interest and 80 as a principal. Why 80 as a principal? Because it is being redeemed at 20% discount. So you prepare a table of inflow and outflow, and accordingly the problem can be solved. I have already solved it, but let me know if you need some clarification in the problem part. The problem is in front of you. The problem is on the board, on the screen. Look at the problem and ask me if you still have any clarification. You need to seek any clarification on the illustration or the problem that I have mentioned. If not, I'll proceed. Now come to the slide. Come to the slide which I have, which is the next one. Now year 0, you are receiving 100. Year 1, you are paying 10. Year 2, you are paying 10. Year 3, you are paying 90. The data which I have put in the red font, is this clear?
Yes, sir.
Check. Okay, check and recheck. Still, if there is a doubt, you can ask me. Now we are discounting them at 3% factor. You can certainly ask me, why not 30%, why not 20%, why not 50%? You remember I have told you earlier also that using this annuity table, we can find out an approximate rate. So discounting it at 3% gives us these outflows. Rupees 10 that you are paying after 1 year is not equal to rupees 10. It is 9.71 paisa. Another rupees 10 that you are paying after 2 years, it is equal to 94 rupees. Rupees 90 which you are paying at the end of third year is not really 90 but 82. In all, how much you are paying? 101. In reality, provided discounting rate is 3%. Similarly, we have used a discounting rate of 4%, and this figure is 98.87. If the discounting rate is 4%, the net present value would be 98 or 99. 98 rupees 87 paise. Using the same formula that we had used earlier, it can be interpolated, and once you interpolate, your answer would be exact cost, and the answer is 3.57. before reading the middle part, read this paragraph. This paragraph. This is similar to, I have written, this is similar to calculating IRR. At 3.57%, 100 rupees received today and 110 paid over a period of 3 years in such a way that 10 in first year, 10 in second year, 90 in third year will be equal to 100 at the rate of 3.57%. This will be called as cost of debt. I am leaving this slide for the time being, maybe for a few seconds. Read the text. There is no point in me speaking the text when it is appearing on the screen, and then seek the clarification. Yes. Are the calculations clear to you?
Sir, from where have you taken this 3% and 4%?
Okay, fine, no issues. Because we have already discussed these things, in your opinion, what figure should be taken? If not 3%, can we take 10%? Can we take 15%? Here lies understanding of table. Also here lies understanding of IRR. To answer your question, let me ask you a question. What is our objective in this particular problem? What do we want to arrive at? What are we looking at? What are we looking at?
Cost of debt.
Cost of debt, okay, but still look at the table. Look at the previous table, previous slide. What did I tell you? Equate them at an appropriate discounting factor. Equate them means our objective is that 1000 we are receiving, 1000 is plus, 1500 is minus. I mean, if you take this just an example, what is our interest? We want to know this, at what rate this 1000 be equal to 1500. Similarly, in this table, what is our objective? We are receiving 100 now, plus 100, paying this. What is our objective? At which rate plus 100 will be equal to minus 10, minus 10, minus 90. This is what our aim is. This is what we are interested in knowing. So we need to discount them. If we discount, suppose at 10%, this figure will be more. In order to reduce this figure, what do you do? At which rate will you discount? More than 10 or less than 10?
Less than 10.
Less than 10. Suppose we discount at 5% and still this figure is positive. What do? Shall we increase the rate or decrease?
Decrease.
We will continue till such time we get two figures. One is positive, one is negative. Am I right?
Yes, sir.
Your question was, why have we started at 3%? At 3%, it is 101. So 3% is not my guess or my intuition. I have arrived at this 3% using the approximation rule. In approximation rule, I discussed when I was talking about the internal rate of return. What did I talk about there? How do we arrive at an approximate rate? We arrive at approximate rate using the cumulative value of table. How do we use those tables? You remember? I'm not saying
yes,
you
sir.
who ask question, apply that and you will arrive at a figure something closer to 3 or 4. So once you apply at 3, if you find higher, then go for 4. You apply any figure. If it's lower, go to higher. Accordingly, we will get an answer. We will get two figures, which one will be more than the more than 100, one will be less than 100, and we can use the formula which I have explained to you earlier. Using that formula, we can arrive at the exact rate. So this is how we are in a position to get our answer. So at 3.57%, 100 rupees received today and paid how many? 190, 110 we are paying at the end of 3 years. At this percent, it will be equal. Then this will be our real cost. This will be real cost to the company. Once we have calculated this, we have one more concept which is equally important, which is cost of debt, which is cost of debt after taxes. I have written here, after calculating KDT, we calculate KDT, that is cost of debt after taxes. Why is it important to calculate cost of debt after taxes? Because the firm gets tax benefit on the interest it pays to the debenture holders. If a firm pays interest to the debenture holders, interest to bank, interest on any fund, company gets a tax benefit. When it pays a tax benefit, that too has to be factored in, that too has to be counted. For example, company's tax rate, if you assume as 30%, then how do we arrive at KDT? Cost of debt after tax is equal to cost of debt multiplied by 1 minus tax rate. Why 1 minus tax rate? Because the extent by which company has paid interest, its profitable income or income, taxable income will be reduced and it will pay lesser taxes. Company will pay lesser taxes because it will claim interest payments as deductible expenses. Apart from interest, can you recall what else can a firm claim in order to reduce its tax liability? Can a company claim anything other than interest for reducing the tax liability?
Depreciation of assets.
Yes, depreciation, very good. Likewise, because firm can, firm can claim tax benefit, therefore the relevant inflow or relevant outflow must be calculated after taking into account all those benefits. So in this case, what is the benefit? Benefit is savings in taxes because of payment of interest. Will the company get tax benefit on repayment of principal also? Is my question clear? Will the company get tax benefit while repayment of principal also? Yes, yes or no? Will the company get tax benefit on the repayment of principal also? I have just written this. You all are required to write Y or N. Just write Y. Why will it not get? Why will it not get?
Because it takes the original principle.
Say it again.
So because it takes the original principle instead of present value.
Because it is okay. Just type it out. As many of you who wish to say why will it not get tax exemption? Because it is used that amount as inflow, or that is why accounting start earlier in earlier semesters and finance in second semester. You are expected to have some background material, background information, which should help you. It will not. Your answer is correct, but your explanation is still not acceptable. Oh, it's good. You continue writing your answers. Because of assuming something incorrect, I'll be able to explain to you the correct answer. Somebody wrote, because it takes original amount rather than present value. Nothing to do with that one. I'll explain. It is good that you have not, I mean, you are writing something which, okay. Because this amount was tax exempted to investors. Yes. It will get tax benefit if debenture is redeemed at premium. Okay. Okay. All right. Continue writing, and I'll proceed to the next one. The reason of KDT I have explained to you. Cost of debt after taxes. So what will be the decision? What will be the figure for decision making? Figure for decision making will be 7%, not 10%. If the tax rate is 30%, assuming that KD is 10, KD is 10, KDT would become 7. Shall I proceed to the next cost, or you need some explanation on this slide? If you need any explanation on this slide, I'll explain. Otherwise, I'll go on to the next one. Now, next cost, we have got discussed 4 different types of cost: cost of debt, cost of preference share, cost of equity share, and cost of retained earning. This is the second one. The manner in which we have calculated, or we can calculate preference share score. The ways in which preference shares can be issued is exactly the same as that of debentures. What is that? It can be issued at par, issued at premium, issued at discount, redeemed at discount. All permutations and combination are possible. Exactly the same permutations and combination. So before I do that, I'll explain to you the meaning also. It is also a source. It is also a mechanism through which a company can raise funds from the market by issuing shares. But which share? Preference shares, not equity shares. The meaning of preference share is that these people again are debtors only. They are creditors for the company. Means company will not share profit with them. If there is a profit or loss, doesn't matter. Company will continue to pay them the amount agreed with them. But the only thing is that they will get preference in the payment. Preference share. They are not owners. They are only lenders to the company. When somebody is a lender, the lender is not concerned with profit or loss. The share agreed by the company is fixed, 8%, 9%, 3%, whatever. Second thing is that the money which is paid to them is not called interest, although it is fixed in nature. But the term used is not interest. The term used is dividend. The term used is dividend. So, when the company pays them dividend, which is fixed in nature, 10, 15, 12, whatever, and terms of issue also remains the same. Then we will calculate. If it is clear, then I'll explain to you how to calculate the cost of preference share. One more thing I have written in the red font. Why is that cost of preference share is abbreviated in the books as KP? In the books of finance, instead of CP, cost of preference share, they write KP. See, what is the short form of cost of preference share? CP or KP? What should be the short form?
CP.
CP, sir.
Okay, what should be the short form of cost of debt? CD or KD? CD. CD. Similarly, it should be CP but in every single book of financial management that you can lay your hands on, look at any book of financial management of your choice, go to the chapter of cost of capital, you will find these terms only: KD, KP, cost of equity. By the same token, it is written in the book as KE, not CE. Cost of retained earning, KR, not CR. So what I expect from you, that you should find out, okay, why is it that they are using word K, not C. You should post your answers on my personal number, a private message, not in the group. Secondly, the return which is given to preference shareholders is not called interest, it is called a dividend. It is called dividend. Now read the slide which is available on your screen. Read it carefully. Up to this place where I am putting some question mark. Don't go beyond this. Just read up to this place only. Then I will start discussion. Okay, if you have read it, let me explain to you the calculation. If you see the terms of issue and terms of redemption of preference shares, these are exactly the same as terms of issue and redemption of debentures. This being the case, will the calculation remain same or the calculation will be different? If you have understood my question, answer me. The terms of issue and terms of redemption are same. What is the difference? The amount which is paid to them is known as a dividend, and the amount which is paid to them, paid to the debenture holders, is known as interest. Having understood this, and also having understood the fact that terms of issue and redemption remain the same, will there be a change in the calculation, or calculation would remain the same? Calculation would remain the same. Tell me yes or no. Change or same?
Different.
Sorry?
Change.
Same. Why same? Your answer is why same? Because what is this amount? 10. What is this amount? Interest or dividend?
The dividend.
I am referring it to the debentures. It is interest. Suppose this heading, suppose I write some heading here, interest. I write another heading, this dividend. I write another heading, anything I write. Will it change the calculations? Because for a system, for the calculator, for a computer, figures remain figures. You call them interest, you call them dividend. As per figures, there will be no change in the calculation by a computer or by a calculator or by a human being. So what is happening in case of preference shares? Only word is changing. Instead of interest, the word we are using is dividend. It has implications other than calculations. It certainly has implications other than calculations, which I will discuss with you in details, but it has no bearing so far as the calculation is concerned. So if a problem is given to you to find out cost of preference shares using some data, you can exactly apply the same method of calculation which you have applied in the calculation of cost of debt. Because for a computer, you write interest or you write dividend, it will make no difference. But it will have so many implications when we go beyond calculations. If this part is clear, whatever I have said so far, I'll proceed.
Sir, will the preference shareholders get the dividend if the company suffers a loss?
Why company suffers a loss? Because suppose somebody gives you money to run a business. Will you pay him something or not? Yes or no?
Yes, sir.
Will it be your loss?
No, sir, my question is different.
Tell me your question. I'll certainly reply. Please go ahead. Why not?
Saying if a company suffers loss for any
Okay.
reason,
Okay.
in that case, will it pay the dividend to preference shareholders?
It will have to give. It will have to give. Because this is what the agreement is between the two. Why don't you think another perspective? Suppose the agreement between the preference shareholders and the company was that it will pay them 10%. It will pay them 10%. Company had a profit of 40%. How much will these people receive? 10 or 40%?
10%.
Why not 40? So if the company is happy earning 40 but giving 10, the company should be equally happy of earning 0 or giving 10. Because this is an agreement. So what would you do if you are to invest your money? Will you invest in preference shares or in equity shares?
Equity.
Equity. Okay, I mean, there can be as many answers as there are students in the class. So this answers your question.
Sir, then what is the difference between preference shares and debentures?
This I will explain to you in the subsequent pages, correct? Certainly. When it comes to the calculation part, there is no difference. No, I am saying in bold font. Now come to the differences. If a company issues debentures, it can claim interest as an expense and its tax liability cannot be reduced. But when it issues preference shares, it pays dividend. It cannot claim interest in the form of any, it cannot claim any tax benefit. But at times, there is a recommended way you can have your capital in this range, this much from this, this much from this, this much from this. Depending on the capital structure of the company, various forms through which it has financed a project, it gets some other concessions from the government. At times, government also makes certain rules that the issue has to be subscribed in these way. For example, company, suppose it is issuing preference shares, it cannot sell entire preference shares to only one person. The government will tell, if you are issuing 1 million preference shares, 1 lakh have to be sold to the people who are interested in buying less than 100 debentures, less than 100 preference shares. So many are to be sold to those who are willing to buy between 1,000 and 5,000. Government does so that as far as possible, there is equitable distribution of wealth. Maximum people should be allowed to participate in the market. Maximum people should be allowed to get the benefit of what is happening in the economy or what is happening in the country, at least on a piece of paper, if not in reality. Let us talk about what is written in the books, and for reality, we can have some other sessions. So because of these reasons, company issues some preference shares also. Secondly, in case there are continuous losses, the debenture holders can ask for the liquidation of a company. They can go to the court. They can ask their share in the decision making. They can ask for a seat of director in the board so that they are part of decision making. They can exercise control over the function of a company, which preference shareholders cannot. So likewise, there are pros and cons which can be read in detail, but for the time being, it is enough to say that it has pros and cons related to taxes, related to control, related to this one dissolution of the company. Therefore, company can go for preference shares also. Maybe it pays less dividend compared to interest to the shareholders, interest to debenture holders. So these are the reasons, but the company will not take any decision which apparently seems to be going into losses. Now we move on to asking you another question. Can the concept of KPT be also introduced in case of preference shares? Should a firm calculate cost of preference shares after taxes like it has done in case of KDT?
No, sir.
Think of, no, because
Because it does not get any tax benefit like in
yes, it does not get, you are right, because it does not get any tax benefit. Fine, very good. Now we move on to the next concept. Before I do that, ask me if there are questions. Your silence I'll take as no, that is you have no questions. But it does not mean that you cannot, whenever you feel like, you can stop and then stop me and ask questions. Okay. Cost of debenture, cost of preference shares, exercise answer to be posted in the Google Classroom. I have sent you a text before also that till such time the class assignments are created, you continue working out on your rough answer sheet. The moment assignments are created, you simply copy them there. Don't write by hand and upload a paper until I ask you. Just write in the form of text only. Can somebody infer or can somebody see the logic of my asking you not to write in hand and post it as a or attach it as a paper? Why should I insist that you should type the answers in the form of text only? Okay, let us leave it. Go to the problems. Check if there is anything which you need me to explain to you. Anything that you need me to explain to you? Is there anything, read it carefully in the problem part, which requires any clarification? I'll do that right away.
So what is N number?
Enrollment number. Enrollment number. This I have explained to you in third unit in one of the exercises. How to arrive at this figure. What is your enrollment number? Yes, tell me, what is your enrollment number?
3324.
3324. What will be its sum? Its sum will be 14. 3 plus 3 is equal to 6. 6 plus 2, 8. 8 plus 4, 12. It will be 12. So for you, it will be 12%. All right. Similarly, others can find out their enrollment number and accordingly calculate the tax rate. Okay, is this part clear? If you have any doubt, any question, ask me. If not, Then I'll move on to the next slide. Is there still anybody whose name has not been entered here? Shall I go to the next slide?
Yes.
Okay. I'll explain to you the next slide. Hold on for a minute. I'm just changing the screen. Next slide is about the cost of equity. Two types of cost of capital we have already discussed, that is cost of debt and cost of preference shares. This is the third category of cost, that is cost of equity. You may recall that we started by saying that broadly it can be divided into two, fixed and variable, or fixed charges or charges which vary with profit. So equity is related to the second category. In case of a debenture and preference shares, the rate of return is predetermined. In case of two earlier, rate of return for the shareholder, for company it is a cost, is predetermined, but it is not so in case of equity. Suppose you deposit or you invest as debenture holder, you know that you will get 10%. Suppose you wish to invest in equity, how much should you get? Your answer will help understanding this concept better. Therefore, whatever you answer, you must have some logic. You can say 100%, I don't mind. You can say 1000%, you can say 2%, any range of your choice. But whatever percentage you say, you must have a convincing answer. So it is an open question to all of you. If you are investing in an equity share, you expect something. If I defined it, it can be said as it is defined as expectation of a shareholder. I consider all of you as shareholders. So what is your expectation? You will express your expectation in terms of a percentage. What will be your expectations? Write your expectation in the chat box. Write your expectation in the chat box in the form of percentage. 2%, 10%, 13%, 14%, any percentage write in the chat box. Okay, these were some of the most important decisions, most important discussion, which will be helpful to you in your life. I'm saying after 4 or 5 years, not